everyone, I'm Gurleen and I hope you're doing well. In today's video, we are going to talk about a trending subject in the market right now, breakout stocks amidst a correction. With the recent volatility in the markets, it can be challenging to navigate your investments and identify the opportunities for growth. So if you're looking to stay ahead in the game, then you're in the right place. So be sure to stick around till the end of the video to find out the top 3 breakout stocks, and don't forget to hit the like and subscribe button and do ring the notification bell so that you never miss an update. So without any further ado, let's get into the video, starting with the broader picture of what's really happening in Nifty 50. Here you can see a decline of close to 10% in Nifty from the peak of 18,887 over the last 4 months now, which hasn't happened since the year 2000. Also, if you see that Nifty has closed in the form of a doji over here, and it is also well placed above the key moving averages on the monthly scale. So the probability is very low that this month as well might turn up in negative. Though the market is supreme and anything can happen here, but we are talking in terms of facts and probabilities. In the last 3 to 4 months, most of the stocks were either trading sideways or in a declining structure. So which are the stocks we can see the investors are going towards? Stocks which have made a 52-week high or hit fresh all-time highs. If we go through screeners, the stocks that come up are Dr. Reddy, UltraTech Cement, and KPIT Tech. So my belief is that if investors are flocking towards these stocks, then there might be some kind of turnaround story. So if we also take a look at the technical angle of these stocks, we'll be able to see that they're clearly giving a breakout. So let's start with the technical outlook for Dr. Reddy. Now, Dr. Reddy is one of the large cap Nifty 50 stocks, which on the weekly charts was trading sideways within a range over a year now. And the entire pharma space had been underperforming. Now, Dr. Reddy has posted the highest 52-week closing, and I do think that Dr. Reddy is a must-have stock on your watch list for the long term, which means that we are taking over a horizon of 12 to 18 months from now. If you see, we have a harmonic pattern on the screen which has been triggered above pivot B at 4477.65. With that being said, if the stock continues to hold above this pivot, it's highly likely that it might test an upside of about 4915, which happens to be the previous swing level as well. Now, as it is a harmonic reversal level, thereafter we can also expect a cool off or a pullback before gearing up towards an ultimate target of about 5391. The second one is UltraTech Cement. Though cement is a cyclical space, but if you are playing for India growth story, government is doing huge expenditure in infrastructure, be it railways, ports, shipping or roads. So cement will be one of the key factors, and UltraTech Cement is showing a decent breakout on the weekly chart. So purely talking from the technical point of view, if you are looking for a cement stock for your long-term portfolio, then I do think that UltraTech Cement is the one. So here on the weekly chart, you can see an inverse head and shoulder structure which got triggered back in November 2022. And since then, the stock was consolidating in a narrow range. Now, over the last few weeks, we have seen a breakout at this counter, and also looking at the strength coming in, it's only a matter of time before UltraTech tests the previous highs at the levels of 7900 followed by 8200. Also, if you consider the classic technical target of this inverse head and shoulder pattern, it's generally taken as the depth of the head. So in that case, UltraTech might as well cross the 9000 mark. But do keep in mind that it is a weekly chart and we are looking at these stocks from a long-term perspective. Also, let's not let greed take over and have strict risk management in case the stock does take a downturn. Even the IT sector had been beaten down, and considering the series of fiascos which have happened in TCS, I think smaller stocks like Persistent and KPIT Tech have shown much more resilience, and it's high time we look at KPIT Tech. Now, once again, we're on the weekly chart of KPIT Tech, and here you can see that KPIT Tech had been consolidating within this inside bar, and in the recent weeks, we have seen a breakout here with KPIT trading almost at the all-time highs. So if you're looking to create fresh positions, well, at the current levels, it does not look very favorable from the risk to reward point of view. And as we all know that the market never moves in a straight line. It moves in a series of zigzags, or call it higher highs or higher lows, or lower highs or lower lows, depending upon what the trend is. So here a good opportunity will only come in if the stock takes a breather from here, or maybe consolidates here for some time, and in that case a favorable long opportunity can be looked at. And also if you look at KPIT Tech, so the levels of 764 to 800, if we also take a quick look at persistent from a short-term trading point of view, then you can see that the stock reversed from the harmonic potential reversal zone at the levels of 5193.55 and is now trading at the polarity levels, and you can see decent buying at these very levels. Also, if you see that it is trading within an inside bar, and you can mark the high and the low of this inside bar and trade in the direction of the trend, though looking at the trajectory and the placement of the stock, the bias is sideways to positive over here. Well, that's it for today's video, and I hope you found it informative. If you have any comments or questions, please feel free to leave them in the comment section below, and don't forget to hit the subscribe button to stay up to date with the latest content. On that note, it's Gurleen signing off. Until we meet again, have a good time.